Well, let's discuss steel now. Seshagiri Rao of JSW Steel joins in. Mr. Rao, thanks a lot for joining us. Before I discuss steel prices, there was a news item yesterday about, quoting the MD of JSW Steel that they're in discussion with JFE for stake sale. Could you tell us at what stage the negotiations are and what kind of stake sale we are looking at?
No, the discussions are in progress. They are not concluded at all. So it is very difficult to respond to what will happen. So the discussions are going on. I think in the next 6 months we will be able to respond on that.
Okay. What is the plan with the Bengal steel project itself? When are you going to start it?
We are completing our brownfield expansion at Vijayanagar by end of this fiscal year, by March 11. So West Bengal project we want to kick off in this fiscal year, in the later part of this fiscal year. So we would like to take up Bengal project in this year, which will be completed in the next 3 years.
When you say this year, would it be like by March you're sure you will start, or do you expect that it could start well in 2010 itself?
Our plan is to start in the second half of this fiscal year, the commencement of construction, and complete it over a period of 3 years.
So you had an AGM yesterday and you said that you expect an EBITDA per ton of $200 in FY11. You did about $190 in Q4. So what's the trajectory we are looking at? Is it going to be back-ended, front-ended, or pretty much even across the 4 quarters?
No, in the Q4 of last year we had an EBITDA of $190 per ton. So if you see in the current year the cost pressures are very intense. Where coking coal prices have gone up, iron ore prices have gone up, whereas the steel prices are getting corrected. But taking into account the kind of demand and supply dynamics and the cost pressures, in this year we don't expect much downside from the current levels of steel prices. So taking that into account, the EBITDA which we had in the last year, our effort is at least to maintain, if not improve on that.
How much are you covered in-house for iron ore?
Iron ore we are covered to the extent of around 17% to 20% captive. So balance we buy in the market, partly from NMDC and partly in the open market.
Mr. Rao, last time we spoke, you said the current prices of steel at that time were really stressed prices, and going forward you'll see an improvement. What kind of improvement have we seen in, say, last fortnight, and what could be the range that you expect over next month or so?
Prices are stable right now. From here we don't see much downside. That can be derived from the fact that the scrap prices are not falling further. Scrap prices are stable and they are looking up by at least $5 to $10 per ton in the last few days. The real demand in the economy is quite strong. So taking that into account, the prices will improve from here on. But for the last 15 days, if you ask me, I don't say the prices have improved, but at the same time they are quite stable. They are not going down.
Are they at 600 or even still below 600? Because that's what you called stress level prices last time.
No, today there may be some distress cargoes, or there are some cargoes from some of the CIS countries below $600. But if I look at the tier 1 companies where the prices are above $600, they have not fallen below $600.
And finally, sir, how much of this China move is going to result in an up move in prices? I mean, how positive do you see this news?
No, it is a good move. If I really see in the last few months, the exports from China are increasing. It is not that the Chinese are very competitive in terms of overall steel production. The production cost in China relative to India is higher. But even then the exports from China are increasing. And in India, if I see in the month of April and May, the imports have gone up by 79%. So in fact, there is a dumping which is happening into Indian markets. So the kind of measures which Chinese government has taken to take away this export rebate is a welcome step. So it is expected to discourage the dumping of steel from China into other countries which are doing relatively well in terms of overall demand.
Are you seeing iron ore prices as having peaked?
Iron ore prices have not fallen relative to what the corrections we are seeing in the steel prices. they have come down to 140 and below 140 level for a very few days. After that again they inched up, so they are in the range of 150, $151 right now. So the iron ore prices have not come down in relative to the steel prices. So we expect some downside in the iron ore prices from here on.
Some research reports expect that you will be able to get a 29 to 30% EBITDA CAGR for 3 years up until FY13. Is that a fair estimate?
JSW Steel has taken several initiatives. As you all know, that we are one of the best conversion cost producers in the world. At the same time, we have taken initiatives to increase our backward integration both in terms of iron ore and coking coal. So in that respect, once we increase our integration, which will definitely happen by FY13, so there is an upside in terms of overall EBITDA margins and also EBITDA per ton. One side we are improving our product mix, another side we are improving our backward integration, and we have the edge in terms of conversion cost. With that, there is a huge value creation which is happening in JSW Steel.
So one final question, what kind of a timeline are you looking at for your JFE negotiations? Can we expect something in the first half? Because there are some who believe that your construction in Bengal starts after this JFE deal is through. So can we expect it in the first half?
So West Bengal project, anyhow, we have announced 2-3 years back. Because of the financial crisis, we have not gone ahead with the project. We have put it on hold. Now we have decided to take up that project in this financial year, irrespective of whether JFE deal happens or not. And we will complete that project over a period of 3 years. As far as JFE is concerned, I hope in the next 6 months it will be either side concluded.
Yeah, just one final question, sir. This stake sale, will it be less than 15%? Or are you open to giving more than 15% followed by an open offer also?
No, it will be very difficult to respond on that. What is the kind of stake? So the discussions are in progress. So I don't think we'll be able to respond what is the percentage of stake or when it will happen.
But are you open to over 15% stake sale? I mean, I'm not saying that whether the discussions are on or not, but are you open to giving more than 15% stake?
No, I don't think we'll be able to respond on that. As I mentioned to you, when the discussions are in progress, I don't want to speculate or give any misleading statements on that. So once it is concluded, we will share all the information about this transaction.
An entirely different issue, Mr. Seshagiri Rao, but since it is so hot, I just thought I'll take your view as well. A lot of banks are saying that they're not going to lend to anyone under 7.5%, that's SBI, and the PSU banks as a whole are saying they won't lend under 8% because of the base rate rules. Do you see costs inching up at all for you in terms of the cost of money, working capital requirements?
No, today the base lending rate purpose is not to lend below this rate. But at the same time, good corporates are able to access short-term funds below 7.5% right now. So if the banks are not lending because of this constraint, that the base lending rate is higher and the corporates are looking for a lower interest rate for the short end of the borrowing, then there will be new instruments, in my view, will come into the market rather than saying corporates will not be able to access the funds in the short term at lower than the base lending rate. Because when there is a liquidity in the market, when the corporates are not willing to borrow, when there are alternate sources of funding below the 7.5% on a fully hedged basis from overseas markets. So in my view, there will be alternate instruments like commercial paper or any other instrument which can be looked at by the corporates.
Okay, Mr. Rao, thanks a lot for